Hello and welcome. I'm Ross, Chairman at Hive Business. Really pleased to have our tax director, Simon, with us here today. Welcome, Simon.
Hi everyone, thanks Ross.
Yeah, thank you. I've invited Simon here today actually to kind of talk about some topical horror stories. It's a bit of a kind of negative thing, but I think it's worth highlighting some of the elements that Simon sees on a kind of a week to week basis because I think there's some subtle nuance to to many kind of situations, and it's worth being aware and prepared as much as possible and knowing kind of sorting out the good from the bad, I suppose, Simon, isn't it?
Yeah, absolutely. And kind of all the things we're going to talk about today are things we've encountered recently as well. So, we know these things are happening.
I think that's probably the pertinent part that, the world's getting more complex. We've got, a massive kind of compression on people's kind of economics. I think there's always a desire to, well, I think there's always be a bit careful about shortcutting. Maybe that's the
Yeah,
essence
yeah.
there, isn't it? Okay, well, what's some of the stuff that you are seeing, and seeing kind of quite regularly?
Well, the number one complaint that we get from anyone we're talking to, prospective new clients, is it's kind of the two same things that keep coming up, and it's really frustrating for accountancy as an industry, I suppose, to suffer with this. But the big one is I just can't get hold of my accountant. I can't get replies from my accountant. They take 2 or 3 weeks to answer an email. And that's so frustrating when you've got questions or decisions you want to make as a business owner, things you just don't understand about what you're seeing and hearing, and there's no one there to answer them for you. That is the number one problem that we see.
Yeah, and like kind of alluding to it happening fairly regularly. How often are you talking? Like, is it?
I mean, it's 80% of the new client inquiries we have, that is one of the complaints they have with their accountant. There's another one, which is probably a close second, is actually I'm giving them ideas. So you've got the client asking the accountant, hey, should I be doing this?
Yeah.
And actually, there's kind of two outcomes there, neither of which I think are very good. So the first outcome is, or no, all the accountant wants to do is work for the tax man and say, no, you can't do that.
Yeah.
Or possibly even worse, yes, that's a great idea. You should have been doing that already. And so, well, why hasn't the accountant already suggested that then?
Yeah. Yeah. I mean, that kind of working for the taxman element of things, is it like, is it is it a black and white answer some of the time, or is there kind of fogginess which they're taking a prudent situation and just,
It is both of those things, if I'm honest. There are black and white situations, but there's a lot of grey areas, and
yeah.
accountants are trained to, as you say, to be prudent, to land on the side of HMRC, I suppose.
Cool. All just ends up with a bad outcome, for our dentists.
Yeah.
Lack of responsiveness, lack of advice, never good. And I think we're talking like weeks delays here as well, aren't we? Like it's not
Yeah.
like
Yeah.
it's not just like 24 hours or anything like that.
Yeah, no, it's not a case of, oh, they called me back the day after kind of thing. It's, yeah, 2 or 3 weeks of just not getting replies.
Wow. Okay. So probably drilling into perhaps some slightly more specific situations, although unfortunately kind of quite regular. I think I would be fair to say one of the things that I kind of see, again, almost on a weekly basis, is possible tax savings from operating via a limited company.
Yeah. Yeah. Encounter that all the time. And I can give a couple of examples actually. So, we speak to associates quite frequently, and we can work through understanding what using a limited company actually means and how it can save someone tax. And invariably we can demonstrate kind of five-figure tax savings for associates. And 10K a year is, well, it's a holiday, or it's a month's income, isn't it, for a good
Yeah.
associate? On the flip side, those numbers can be even bigger. So we're working on a case at the moment where this particular practice stands to save 100K a year in taxes, and there's nothing that's changed that means that's a new thing for them. They could have done that a long time ago. Their previous accountant just wasn't looking at it with them.
Do you have any clues as to why this happens? I mean, is it a little bit what you're talking about a minute or two ago, where um, there's no idea generation, so we're kind of just carrying on pedaling in the same direction, or is there something else that's happening? What like?
It, it,
Do you
it
have a
is
view on
it
it?
is it is a bit of that. We also see, accountants have these paradigms sometimes of, well, the rules used to say this and it didn't work then, but maybe the rules changed 10 years ago and the accountant hasn't caught up with that. Or there can be other things such as, is there an NHS contract in the business? Because you can't incorporate an NHS contract, or the NHS have said no, so we'll park that and we'll never revisit it. Or maybe there's debt and the fear of needing to potentially refinance it is off-putting. These can all be challenges, but there's often ways around or through those challenges.
Yeah, they're
And for
like
100K a year, you find a way around it, don't you?
well, that's the thing. It might have been true at one moment in time, but that doesn't mean it's true forever, which is it is complicated if you don't have your accountant kind of battling for you, I suppose.
Yeah, yeah,
Well, okay. I mean, there's a lot of ground covered already quite quickly there in what we're talking about. So massive opportunity from what I'm kind of feeling from what you're saying, and it
yeah.
like literally happened on a week to week basis with you by the sound of things. Changing the zone a little bit. You do a huge amount of kind of practice acquisitions and practice sales as well.
Yeah.
That's even more ripe with kind of landmines in there, is it?
It is, yeah, not just from the accountancy part of it either. I think, the theme here, I suppose, is that the right experts can help you avoid these landmines. And when we're talking about a practice acquisition or sale, we're also introducing solicitors and probably a broker as well on the sales side. Any one of those three parties not being the best at what they do is going to lead to some problems for you as the client.
And again, I'd almost hesitate to ask, how often are you seeing kind of suboptimal purchases or sales? I guess you don't see suboptimal purchases so much because you're involved by kind of essence, but as
Yeah,
a sales side of things,
yeah, we do kind of we end up in situations where clients have had bad experiences, and sometimes they're coming to us saying, "Hey, I have just sold. I'm now in the next phase of my life as a dentistry. Actually, maybe looking to acquire a replacement practice." And we can see, okay, well, there's some things that maybe weren't quite so good in the sale that has just concluded. You've had a good outcome, but perhaps it could have been better, or transactions that we learn just didn't happen because advisors dropped the ball, I suppose. There's one in particular that comes to mind where a sale fell through a couple of years ago now, but it was because the accountant was slow. The accountant didn't really know what they were doing. Perhaps they fed bad due diligence information across, or the books weren't kept tidy enough, or some other thing. Like I say, we weren't involved, so perhaps we don't know all the specifics, but the client squarely blames the accountant for that deal having fallen through at a time when prices in the marketplace were higher, multiples were higher.
wow, okay, so a couple of years ago,
Yeah,
practice might have been worth X,
yeah,
worth £1 million less now, or whatever it might be.
yeah.
Or what's happening there behind the scenes there? Like, is it just loyalty to the existing accountant? It's like,
There is a loyalty to the accountant. I suppose one thing we are fortunate of as accountants is we do get to build that loyalty with our clients. But things like that, I can't put an actual number on it, but we are talking hundreds of thousands of pounds lost because
oh,
that accountant didn't really know what they were doing, and the individual didn't seek advice elsewhere. There's a
yeah,
kind of another case we recently worked on where we weren't actually involved in the sale, but we've looked at it afterwards. And unfortunately, I'm coming back to the kind of using an expert thing and the other experts involved in a sale, the this particular case had a really good solicitor on the well, on board,
yeah.
and they've spotted some of the tax landmines that the accountant was just not involving themselves in. Could have been so bad. if the
What?
solicitor also didn't know what they were doing.
So sorry, what you say weren't involving themselves in? What do you mean by that?
The accountant was kind of just saying, well, that's just not what we do. They're refusing to involve themselves in the sale.
Wow.
But actually, they still charge quite hefty fees for not involving themselves in the sale as well.
Wow. Okay. So you're doing some of the cleanup on that,
Yeah,
then, are you?
yeah, yeah. So we've managed to kind of steer the client through, in the most basic, give them an idea of what their tax bill will be. So this
Yeah.
person sold their practice in the previous tax year, and it wasn't until they joined Hive a couple of months ago that they now know their tax bill, their capital gains tax bill. They
Wow.
At no point had they ever been given an estimate of that by their previous advisors.
Wow. Wow. Okay. I think I might move on because this is kind of filling me with a little bit of kind of dread to talk about those kind of situations more often. Only because it's so very important. It's a really
Yeah,
important moment in a dental practice owner's life. And we're talking millions.
yeah.
Okay. What else are you seeing at the moment? Well, I can tell you what I'm seeing and feeling. Everyone is actually getting really quite annoyed about the level of kind of tax exposure. And I don't even just mean tax on how much people are earning on a year-to-year basis anymore. There's a huge amount of kind of vitriol starting to kind of swell up. Um, Kind of broadly around kind of wealth taxes
Yeah.
and families and inheritance tax elements of things. I know you'll kind of echo what I'm saying there, but in that kind of that space is starting to will require more attention, I suppose, isn't it?
Yeah, certainly over the last, maybe 6 months or so, where there's been some announcements in changes for inheritance tax that are coming in this April and the following April that suddenly mean a lot of people who've previously thought it's just not a thing I'm going to have to worry about now have to worry about inheritance tax. So there's a
Yeah.
lot more focus going there, and a lot of people kind of getting things wrong in the solution. So I think the way I would describe it is people are having great ideas, they're doing them badly.
Okay. Um, what do you mean there? I think we're talking quite a lot about kind of kids and shareholdings, aren't we? That's probably the
Yeah,
most ripe one.
perhaps the overriding solution to inheritance tax is okay, not the only solution, but one solution is to own less assets. Now, you're
Yeah.
not going to suddenly make those assets disappear or give them away, but hey, what if other family members owned them? What if the children owned them? Maybe there's just children owning shares in a company. Maybe there's family investment companies and things like that. These are great ideas in the right circumstances. There's ways to get the advice completely wrong. There's a particular firm of accountants out there who actually know they don't call themselves accountants, but they like to give tax advice. There's so many mistakes in what they're doing, and they're well known. They've got a big following because they do have perhaps the right attitude of, well, hey, we want to help our clients save tax, but they're giving bad advice.
Yeah. Okay. And this area kind of encompasses property assets, business assets, kind of any assets you might have. There's a general kind of trend
Yeah.
towards trying to undertake planning to kind of execute it. I think probably just to pick on one particular element there, because actually that's a massive area which is really complicated in terms of asset planning. I suppose that's almost your point, really, that it is a particular kind of expertise, much like implant dentistry is a different type of dentistry to general and maintenance dentistry. You kind of need to have enough experience to deploy it rather than kind of just have a little go and do a couple of implants a year.
Yeah, there's a lot of don't know what you don't know, I suppose.
Yeah. Okay. Um, okay. Well, that's really good. I probably want to kind of just pick on one specific part because I think this is worthwhile everyone being aware of in terms of topical and horror stories. There's massive desire to kind of save tax on private school fees,
Yeah.
and there's again a huge amount of kind of range of planning out there, but there's still some stuff bubbling, isn't there?
there's several different ways to plan taxes around school fees. Some ideas have been around for a long time. One in particular that we've spoken about before in previous kind of videos and blogs is involving grandparents as shareholders as a way to avoid some of the tax rules. Like it's a well-trodden or a well-known thing now since there's been an actual spotlight from HMRC. So that's HMRC kind of saying, hey, we know about this. We know it doesn't work. This is why. There's people still doing it. People still kind of pushing that out there.
Okay, but everyone needs to be really aware of that then.
Yeah, I mean, we talk about school fees with our clients quite a lot, and to be clear, we're not talking about that. There's other ways to do it, but
Yeah.
there are still people suggesting that.
Okay, good. Well, I mean, we've covered three kind of main zones there. Scratch the surface, I'm absolutely sure, but
Yeah,
you really need to kind of get the right team backing you. If anyone's interested, Simon, what should they do?
drop us a line. Yeah, happy to kind of discuss and take a look at any historic arrangements or transactions that might have happened. There may be things that can be done to solve problems that
Better
occurred in the
them.
past. Or always happy to talk about future plans and look at ways to optimize things for people.
Thank you very much for sharing today, Simon. Appreciate it.
Thank you.